Was Friday's air pocket a one-and-done dip, or did it open the way for a more choppy phase of this three-year bull market? Let's ask NewEdge Wealth Chief Investment Officer Cameron Dawson. Cameron, good to see you here.
Good to see you.
So let's do some tape reading, I guess. How are we thinking about this? We had this unusually calm, steady climb toward all-time highs. We finally get barely a 3% pullback, and now the market is kind of trading in that range, indecisive.
Yeah, we've been stuck just within that range, and I think Friday was a bit of a wake-up call as to how much leverage there was built up in certain pockets of the market. So certainly within Bitcoin, but as well as within the speculative high beta stocks, you certainly saw big, huge downside moves. But you're still in an environment where you have a positioning chase that we think could continue on. You're just in the 74th percentile of overall that Deutsche Bank consolidated positioning. You have earnings that are coming in pretty strong, and you have earnings estimates that continue to rise. Liquidity still appears to remain abundant. Maybe Bitcoin is possibly calling that into question. So it means that possibly we could continue this drift higher, but it's not necessarily a straight line up.
Yes, and it's interesting because universally people would say, yep, we should lean positive in the fourth quarter. All of the patterns, all of the seasonal tendencies would tell you that's the case. And yes, positioning is not maxed out. And almost everybody said, but we could get some volatility and some downside action. And I guess the big question is, has anything that happened changed the character of this market? I see the VIX is holding above 20. Now, that could be an overreaction to a short-term move, or it could be the market bracing for something else.
Yeah, and I think we've been asking the question, was September being so very strong kind of against the seasonal odds?
Yeah.
Was that somewhat of a pull forward of everybody effectively saying, oh, I'll buy any weakness in September because there's going to be a big chase through the fourth quarter? But I think it comes down to something we think fairly simple, which is that when we get new headlines across the tape, do we have that challenge the current earnings consensus? Does trade headlines challenge us to make us revise our estimates in any way? And if the answer is no, it means that it likely is something to be faded. So we've been operating under this simple rule, is that if the 12-month forward earning estimate continues to make new highs, the S&P 500 probably will continue to make new highs as well.
How important is it what is driving the forward estimates higher?
Yeah.
I mean, just in terms of where you would want to look within the index.
Yeah, I think it is incredibly important because we talk a lot about the K-shaped economy when it comes to the consumer within the U.S., but there's very much a K-shape that's happening within the overall equity market, which is that what's driving the earnings revisions higher is coming from this small handful of AI names, plus the banks. Those two areas have been very strong. But you look at this rally within something like small caps, and you're actually still cutting estimate revisions. So small caps have risen by 45% since Liberation Day. We've actually cut earnings estimates for 25 and 26 by 10% since Liberation Day. So the small cap rally isn't necessarily anything based on fundamentals. It's just probably more something on positioning.
Right, that which would point to, kind of the lower quality tier of the market that has in this latest phase taken flight.
Yeah, and if we wanted any evidence for why this is an abundant liquidity environment, we'd say, look at the junk, look at the high beta, look at the more speculative parts of the market. Clearly, there's this appetite for risk. And so if those things start to fade, it could be ushering in potentially a new leadership phase of this market. We would think that at the end of the day, quality over the long-term cycle does win out. You typically see these big low-quality rallies that tend to reverse themselves.
Right.
But high beta has held in a heck of a lot stronger than we were expecting, at least in the last month, given how strong it was coming off of the lows.
Exactly. So it's not as if we're coming out of a trough or a growth scare. So it's a little bit odd.
Yeah.
I guarantee as you make the rounds with clients, they want to know your take on an AI bubble in the making, an AI bubble that's here. Is it irrelevant to talk in bubble terms?
Well, we think that you can have a bubble in earnings just as much as you can have a bubble in valuations. And I think that's an important point because if you look at some of the valuations of the AI-related names, not necessarily those quantum names, but just our kind of classic Mag 7 AI names, they're not necessarily in bubble valuations. However, they have had supernormal earnings growth. So I think the biggest question 2026 is the CapEx is set to slow. We all know this. It's the law of large numbers. Will the market care about that CapEx growth rate slowing, that second derivative slowing? And will that cause people to kind of reassess this up and to the right kind of super normal trajectory of extrapolating huge earnings growth for all of these players?
Right.